about how many subscribers you have on YouTube. You have more subscribers than anybody. And it's probably the biggest, largest YouTube subscription that anybody's had. But also, it's not numbers that matter, Nick. And I know everyone's going to quibble over this, but it's content. It's quality. And your subscribers are amazing. They're great. They're high quality subscribers. And that's really what you have to look at. Don't just focus on the numbers. I mean, if people are spewing a bunch of fake news, just don't get in the mud. They're amazing folks. Their engagement, the way that they like the videos. Anyway, I hope this puts this to the end. I hope that this controversy is over and we know who the real YouTube subscriber champ is. And it's you, Nick.
Hello, welcome everyone to In Time. Yeah, that was on the standby. That was Simple Gifts. It's often mistaken for Lord of the Dance. Simple Gifts was a Quaker song written about 200 years ago, if I recall, in Massachusetts. The lyrics were lost, and it was picked up by some Celtic musician who decided to add his own lyrics to it and called it Lord of the Dance, using the original Simple Gifts tune, and was credited as Lord of the Dance until somebody found the original actual lyrics that went with the song, which was very different. Anyways, the Yo-Yo Ma version of that is probably one of the best. That was the intro music. At any rate, thank you all for joining us. With me tonight is Zandring. Zandring, how you doing?
I'm doing okay.
Well, thank you very much for coming here. We're going to be talking tonight. So I've heard on occasion. Have I heard? I think I've heard. I'll be honest. I knew very little about the flat tax, or not the flat. I'm going to be making a lot of errors like that tonight. The fair tax. You had mentioned it, and we started talking about it. I did some research into it, and Shaker song, not Quaker. All right. Well, thank you. Thank you. There you go. I stand corrected. So I had done. I started looking into it, and this is a tax plan that was first proposed. You know the history far better than I, so we'll get into that in a minute. But first proposed, if I recall, 1998, somewhere around there. And it's been proposed basically every year since then. It would be a complete it's just a complete overhaul of the U.S. tax system, which when you first hear about is a little intimidating. Like, the system already sucks. The idea of a complete overhaul doesn't make me necessarily feel any better about it. But it's by far actually the simplest plan I have ever seen. It was proposed. There was a 2021 to 2022 proposal, H.R. Resolution 25. So it was actually one of the first proposals last year, and it continues to come up every year. It is gaining some steam, but it's very slow. So what I'd like to do is go over just what this proposal is. It is extraordinarily simple from what I can tell, but given how complicated our taxes are and our economic system, it devil's in the details. So we're going to go into that. There is that I can tell a lot of pluses, certainly some drawbacks. We'll get into that too. No system is perfect, but it is certainly interesting, and I think it is worth knowing. So we're going to do a bit of a primer on it today. Neither of us are tax experts, neither of us are economists, but both of us have done study in this particular plan and or related fields, at least to some degree. So I think there's going to be a pretty good primer on it. So what is the fair tax? And I'm going to tell you what it seems to me, just the 3,000-foot view, and then we'll dive into the details. But from what I can tell, the idea behind the fair tax is that we would eliminate all income taxes. Now, this includes FISA taxes. This includes any kind of income. And by the way, going forward, caveat, when I say we, I mean the federal government. This is not going to influence state taxes directly. We will probably end up talking about how state taxes might be changed by this. But from this point going forward, unless we indicate otherwise, we are only talking the federal tax system. So we would eliminate all income tax of all kind. This would also eliminate most of the need for the IRS. Probably most people would never even see or interact with the IRS again. Instead of an income tax, we would add essentially a sales tax. Now, a sales tax is a type of consumption tax. You can tax either income, money as it comes into people, or consumption, money as it goes out for goods, services, so on and so forth. This is a kind of consumption tax. It is a sales tax, essentially. We'll get into the nitty-gritty of it. But essentially, no more income tax. Your money comes in, it doesn't get taxed. It gets taxed when you spend it. That's it. That's essentially the change. Does that sound like roughly a good description to you of the fair tax plan?
Mostly, yeah, from a high view. I mean, it eliminates it eliminates more than just income taxes, because it eliminates payroll taxes, it eliminates corporate income taxes, it eliminates capital gains tax. So essentially,
the so-called death tax. So it would eliminate, estate tax,
tax, okay, death tax, estate tax. All of those taxes that individuals end up paying would be scrapped in favor of a consumption tax. And your FICA taxes, it's FICA, not FISA.
Oh, yeah.
So
FISA is the warrant. Okay,
yeah, and I would not describe it as an overhaul of our tax system. I would say we're scrapping the tax system that we have entirely and replacing it with the fair tax. It's a completely different system. Our current tax code it's approaching it's over hundreds of millions of pages long at this point, or hundreds of thousands of pages long. I'm sorry, not millions. Hundreds of thousands of pages long.
The IRS has testified to Congress that there is no human being alive that knows the entire code, and in fact, it's probably not even possible, short of a savant, to know the entire code. And there was a study done where they submitted the identical tax return, one identical tax return, to 5 different professional tax preparation companies, and they all came back with different results. Roughly sounds pretty accurate. Is that about right?
Yeah. Nobody knows what the entire tax code says. No single person really can know. It's too complicated. There has been demonstration after demonstration of proposing the exact same question to different IRS agents and tax professionals, and each single one of them seems to have a different answer. And there's times where even the IRS doesn't know if something's legal. It will depend upon your auditor if it gets audited. So yeah, the system that we have is so complex, so convoluted. Nobody really knows exactly what all it says, and we spend billions. We, as in the United States, spends billions with a B of dollars in tax compliance costs to make sure that we're submitting truthful and accurate tax returns. So yeah, there's the system we have is pretty complicated and difficult, and it's that way on purpose, by the way. I believe that wholeheartedly that it is specifically done this way with malice aforethought. And the origins of the bill were some business leaders in Texas, of all places, had coming off of a pretty successful run. I don't remember exactly what they were doing, but they were successful with it. Decided that, why don't we expand our view a little bit, and we'll take a look out, and what kinds of things can we tackle? They just said, hey, well, the tax code of the United States is pretty bad. Let's see what we can come up with that. And they started with a completely blank slate. They said, let's just disregard what's there currently, and let's just come up with a taxing structure to raise revenue for the necessary functions of government. Let's find the most efficient and best system for the citizens of that country so that they're still funding their government at the same levels that they were currently funding it. It wasn't about spending reform. It wasn't about anything other than how do you actually raise revenue for legitimate functions of government. And they put everything on the table. They looked at a flat tax. They looked at consumption taxes. They looked at income taxes. They looked at everything. And when they gathered the experts together to study all of this, and of course the people who initially proposed the fair tax were expecting it was going to be some sort of flat tax. And they were actually surprised when the experts all came back and said, no, actually, we think that the most efficient and best way of raising revenue for the government that is most beneficial for the citizens of the country is actually a consumption tax, which surprised them. But they're like, hey, we hired all the experts, and we said we would support whatever they came up with, and they came up with the fair tax, which is actually named by people in focus groups that they were talking to get information from average people, and that's where they ended up coming up with the name of it, because a lot of the people in the focus group were like, wow, this sounds really fair, and we should just call it the fair tax. So that's how it got its name.
Yeah, I'll be honest. I hate the name. I despise the name, and I will tell you why. It feels like they're trying to tell me what I should think about it. Fair is often in the eye of the beholder, and I can already anticipate some objections, and fair is a very hard thing. So when somebody says it's the fair tax, it's like, ooh, it just feels like it's priming the pump to I dislike the name, but I would have put the name aside. I would have put my dislike for the name aside. So we were talking about tax preparation. I don't think this is like the hugest selling point, but this is certainly not trivial. In the U.S., we've gotten so used to the fact that we have to pay taxes. We have to pay estimated taxes too. So we're paying taxes in the future. You pay essentially what you believe you're going to make in revenue. You pay that in advance. If you have overpaid, they'll give you your money back. If you've underpaid, you owe more plus interest. So you're paying on money you haven't even gotten yet. And because of the way that works, that adds a tremendous amount of complexity. Now, the Tax Foundation says that in 2012, and I'm using these numbers, I've been unable to find more recent numbers, so I apologize. These are 10 years old, but and my assumption is that the numbers have gotten worse. There's been an exponential growth in the tax code recently when you get into deductions and all of this other stuff. But what they're saying here is that an IRS publication shows that the cost of individual tax returns is over $20 billion in compliance costs. And if you assume that each tax return takes about 8 hours to fill, which strikes me reasonably accurate. If you have more complicated taxes, it will go over. If you have less complicated, you can do it in probably a couple of hours, but it's not easy. And that's 1.35 billion human hours spent in compliance. So, before actually, I do want to. I'm going to do an aside a little. Oh, hey, squirrel moment. It's already been brought up. The difference in ProLib actually discussed this last night. So the definitions that we're going to use is a regressive tax is essentially a flat tax. It's a tax that everybody pays the same amount. That's called a regressive tax. And a progressive tax is a tax that scales. And usually, ideally, if you're doing a progressive tax, the scale is people at the top pay a higher percentage and the people at the bottom pay a lower percentage. And we're going to get into some of those numbers, but currently we're using a progressive tax, and ostensibly, assuming that they don't get out of it with tax dodges, with a lot of it ends up being capital gains, which is a lower tax rate. It's a 15% rate, but ostensibly the tax rate goes up to about 35% on the wealthiest. It's presumably zero on people making below poverty wages, and then you got a scale. But let's see. I had the numbers. I think it is. It was. I want to say 25% was the average Tax that was paid by Americans last year was about 25%. So 25% of your wages went to the IRS before you got it. So what are some of the advantages of essentially a national sales tax, a consumption tax on goods? What are the advantages of that? Other than, so the first one is, okay, no more IRS. When you buy something, the place you're buying it from is going to collect the tax, and they will pay the IRS for you. You, as an average person, have no reason to ever interact with the IRS ever again, because you're not the one paying taxes out of pocket. It's being put into the price as part of a national sales tax. So what are some of the benefits of this?
Well, the first benefit right off the bat is that if I'm using these numbers simply because they're really easy, not because they reflect reality. But if you work 10 hours in a week and you get paid $10 an hour, your check at the end of that week, or if you get paid every 2 weeks, check at the end of 2 weeks would be $200, $100 at the end of the week. There is no, what did you make, what did you take home? It completely, well, you took home everything you earned. You tend to get less of what you tax, more of what you subsidize. So you're not taxing the actual income. I get all of the income that I earned. I don't have to fill out W-2 forms. I don't have to fill out a tax return at the end of the year. Nobody cares what I'm getting paid per hour. And everything that I get paid per hour, I get in a full check to me. So my income is automatically going to go up because there is no tax withheld from it. So immediately you get approximately, this is kind of an average, and averages can be tricky, but an average of 25% raise on your taxes. And as to progressive,
sorry, raise on your income. So your paycheck would be the same. Actually, your paycheck would read, at least at the top, you've earned the same amount of money, but you are no longer paying the average 25% income tax that most of us pay. So your average take home goes up 25%. Is that's what you're saying?
Right. Yeah. There's no longer a difference between gross and net income. It's just all your income.
All right. So, okay, my income goes up 25%. That's nice.
Yes. And one of the other issues, I'm not sure if I want to get into this right at this particular moment, but one of the other issues is, the products that you're currently buying have an embedded tax price in them because everybody has to pay their taxes, and those taxes are generally passed through to individuals at some point. So all products manufactured in the United States, even some that are imported, all have an embedded tax price. So you're already paying that as well. Well, if you're getting rid of all of the taxes for businesses as well, that embedded tax cost in the price of your items goes away. And we've seen time and time again very good examples of how prices drop dramatically, precipitously. When suddenly the cost of an item goes down, the price of that item drops precipitously very soon afterwards. Yeah, and so the cost of actual goods will drop as well.
All right. So I definitely think we need to get into that. So, the first big plus is now paychecks are going to be 10 times easier. You don't have withdrawals, you don't have withholdings, you don't have to worry about the IRS. Businesses don't have to worry about the IRS. Businesses don't have to withhold taxes for you. None of that's done. All that's done. Now, the original proposal, and again, I think it was 1998, was for a 23% national sales tax. Now, that's a little hard to swallow. You take a look at that initially, the first thing you say is, okay, they are adding 23% to the cost of everything. 23%. You think inflation's bad now? Imagine overnight, the price of everything goes up 23%. However, and now that's flat. That is basically of everything. We're going to get into that as well. But initially, that looks pretty shocking. But, and again, there's nuance. We're going to get into it. But if the average American is paying 25% in taxes already as a income tax, your paycheck is now going to be 25% higher on average. So even if products go up in price 23% because you're paying the 23% sales tax that's now on them, it's actually still technically a net gain for the average. For people on the low end, it's going to hit harder. For people on the high end, it's going to hit less hard. We're going to get into all of that. But so far, just for the broad strokes, does that sound roughly accurate?
Yeah, I mean, it's a little more complicated than that because, it's based off of what you actually earn. So, if you get a 25% raise and you're making $10 an hour versus getting a 25% raise and you're making, $33 an hour. I don't know why I just pulled out 33, but there's a significant difference, in the amount of income that you're going to gain. So if you have a higher hourly wage, or if you're paid salary, that's slightly different as well. People have different salaries. So you're going to get a percentage raise off of what you make essentially per hour, what your actual income is, whereas prices will just go up a set 23%. So, eggs will go up 23% ostensibly.
Yeah.
That's before we really start talking about.
There's a lot to discuss, but just for the overall, yeah. So that's what we're looking at. So it's again in the broad strokes. Essentially, now the original proposal was proposed to be revenue neutral, if I understand correctly. So what that means is the idea was that the sales tax rate would be set such that the government would be making the same amount of money in income. They'd be taxing people the same amount as they had been with the income tax. It's just now coming in through a sales tax instead. And that was the last proposal, which was again 2021, was also designed to be at that revenue neutral place. So it's the estimates, and they get complicated, and there's some guesswork, so we're going to get into that. But the estimates that they made was, and the goal identically is, look, government makes the same amount of money. It's just on the back end when you purchase things instead of on the front end when you get your money.
Correct.
All right.
Yeah, this proposal has nothing to do with anything other than how to raise revenue, how we should raise revenue for government. It doesn't talk anything about whether government's spending the money wisely or what it's spending it on. Any of those things, it's like get rid of all of that in your mind. This is simply how do we raise money for the government? Because we've all agreed that we need a government and we need to raise money for that government to do things. So they wanted to make everything revenue neutral so that, it's like, look, you're going to get the same amount. We're not trying to sneak in, governmental cuts or anything like that. We're trying to make everything kind of equalized as far as revenues gained to the government. And then you can discuss, other policies or whether, governmental cuts or expenditures. We can discuss all of that after we've fundamentally replaced our tax system with something that helps the average American a hell of a lot more than an income tax does. So that was the point of it.
So, and initially the word that people use a lot with this is efficiency. So the idea is we go from, so do you know roughly how many lines of code, the IRS, how many pages of code that is versus the pages of the tax code that we would have after this?
Yeah, the current, I've lost track. I used to have the exact number, but it changes every year, 5 or 6 times per year. But it's over 100,000 pages worth of tax code now. I mean, it takes up an entire library shelf to try and house the books for the tax code. It's insane how long this thing has gotten, and every year it actually seems to be growing exponentially, not just linearly. The fair tax, at least in 2005, I didn't actually read the one for 2021. They don't really change it all that much except for updating some of the numbers. But it was like 158 pages.
150. So the U.S. tax code, the entire U.S. tax code would drop to about 150 pages.
Yeah, roughly.
Okay, that's where. So you see, I gotta tell you, when I keep hearing that, it's like that is such a shocking change. It's hard to kind of wrap your head around. Could we actually do a tax code like this? But this is actually a lot of European countries have and run off of effectively a consumption tax. So this is not actually a brand new proposal, and it's been done successfully in other countries. Is that right?
Yes, other countries have a VAT, a value-added tax, and the difference between the fair tax that we would use here, I kind of agree with you. I don't particularly like the naming that they did for the fair tax, but that is what it's called, so we'll call it that.
Yeah.
And the difference between the fair tax and a VAT is a VAT is applied at every stage of manufacturing where value is increased. That's why it's called a value-added tax. It's taxed every time the value goes up. And the thing about a VAT is that it's really difficult to tell how much you're actually paying in taxes because you don't know how many stages that thing was actually, the products and services. Well, services are fairly easy, but products, you have no idea how many times the VAT has been applied to that product. Politicians love it because they can sneak in, tax increases and raise more revenue without blatantly coming straight out and saying, yeah, we just raised your taxes by a whole bunch. So it's a little bit more difficult to keep track of how much you're actually paying, whereas in the fair tax, it's a single tax. It's blatantly listed right on your receipt when you get the product after you pay for it, and it's a single percentage number. It's like exactly how much you paid in tax. And I think it's important for the citizens of the country to know exactly how much they're paying in tax. Which brings us to the other question. It's like, how many people actually know what they pay in tax? When I ask somebody how much they make, assuming they actually answer me and don't tell me to get piked, that it's none of my business, they don't actually know. They can tell me how much they took home. So a lot of them don't even know how much they grossed. They know how much they took home. My take home is this, because that's what they see. And I have some issues with that. It's like the citizens need to know exactly what they're paying in taxes so that they can judge whether the cost of what they're paying for the services that they are getting, that the government is providing, is this a fair, is it worth it? It leads into a moral hazard argument.
And to piggyback off of two things now. So the first is the current tax structure does the same thing that the VAT tax did, which is that really when you talk about if you buy a T-shirt, there were manufacturing costs in the cotton. And when the company that actually made the T-shirt bought the cotton, the labor costs already paid their taxes for that, and then so you end up having a sort of all of these other taxes that go all the way down. So it's a tax on a tax on a tax on a tax, versus just a tax on consumption. The other thing is, it seems to me there was a study done that suggested that the reason that this country does prefer a income tax is explicitly for that reason. People don't miss the money that they don't already have. So you would be, if let's say you earn $100 a week, just again, nice random numbers, you earn $100 a week. If the government takes out 20 before you ever get paid, and then you get $80, you say, oh, that's a disappointment, but hey, I got $80. But if you get the full 100, and then you have to pay the 20 later in taxes, and the government says, yeah, you're going to give us 20, you become much more aware of exactly how much you're paying because losses loom larger. You have you already have the money, and you are now losing it, as opposed to it gets taken out before you have it, having really a profound psychological dulling effect on the impact of those taxes. Is that
yes, this is why the government pushed so hard to get to have tax withholding, to have the tax removed from you before it was actually due, by the way. It's like when the government withholds money from your taxes, that tax money is not actually due. They do not pay you interest for the money that they took from you and held until your taxes were actually due at the end of the year. But they recognize that whole thing. It's like if you pulled it out before you got your hands on it, that you were less likely to miss the money than if they required you to write a check at the end of the year. They also knew that tax compliance could be an issue because some people wouldn't structure their payments correctly, and they would end up not having the money to remit to the government, and so that would create a huge cost to the government to try and go after those taxes. And we still have some of those issues even today with anybody who works off of a W-2. Any people who own their own small businesses, they're not employees. They're expected to pay that tax. There's no tax withholding from any of that. So, they still end up with some of that problem now. But they had tax withholding at one point for one of the Great Wars, and the people of the United States accepted it for that war. I'm suddenly drawing a blank on whether, I think it was World War I. And then afterwards, they're like, hey, you need to stop this. And they actually were able to get them to repeal that withholding but the government saw how efficient, at least on their end, it was to just take the money up front, and how much less angst there was over paying taxes if they withheld the money first than when people have to actually write a check at the end of the year for the tax that they owe. So they kept pushing, and they were finally able to get a tax withholding in place. So now they take the money before you ever get to see it. And I have a problem with that, just because it leads to people not knowing what they're actually paying in tax. And again, it's my moral hazard argument about taxation and the government spending their money.
So, and I mentioned earlier, and I lost my train of thought there, but I think, so efficiency is a big, so basically and again, this is on paper, and we're going to get into the differences between the paper and the reality. We're going to talk about this, but on paper. So what we're talking about now is cut all income taxes, the business, personal, all that stuff. What you see on your paycheck is exactly how much you get. What you negotiate for with a business is exactly what you get, which is the other thing too, which is, people have to worry about their tax bracket. I know I have friends who've actually they've asked to be paid slightly less, because if they get pushed up into another tax bracket, it changes other income they have from other sources, and it screws with the taxes, and it gets really complicated. All that goes away. That would be about 25% to the average American, that their income, their take-home would go up 25%. The proposal currently is 23% on a national sales tax. You have a dramatic increase in efficiency. The IRS doesn't need to ever bother individuals, because the individuals aren't the ones who are collecting the taxes. They're collected by business at the point of sale. That tax then goes, and it's businesses that have to worry about enforcement. You don't have to make any of these calculations for these codes, so you get rid of a whole bunch of lawyers, accountants, so on and so forth. Much more efficient. But I noticed a couple of things. The 23% is less than 25%. So somehow this tax that is being applied at the sales level is a little lower than the average American and is paying, and yet somehow it's expected to bring in more revenue. And when crunching some of the numbers, what I saw was that they said that right now only about, and this is from oh Jesus, I forget the tax center. No, I've got to look it up. It was a government website on taxes, and the essential takeaway was that only about half of all Americans actually pay taxes. And under this plan, many more people would be paying taxes. And I'm sitting there going like, okay, now I see how they can lower the tax rate, at least slightly, the average tax rate, and still increase revenue. But where are these other people coming from? So how are more people paying taxes under this system than you have right now?
Because right now you have to, in order to pay tax as an individual, you have to have an income. If you don't have an income, then you're not paying any taxes. Under the fair tax system, you're paying taxes regardless of your claimed income. So this captures a heck of a lot extra activity, and broadens the tax base from approximately 150 million people. I think that's actually gone up. I think that was the 2005 number. But I think there's a little more.
We're going to assume. The numbers we've said before. Yeah, the numbers are going to be, because they change a lot, so about 150,000.
Yeah, so million, 150 million.
Yes,
and it broadens it out to much closer to almost 300 million. Because everybody's buying things. This also, interestingly, captures income tax to support our government from things like tourism. Tourists come over, about 50 million tourists a year. Well, anytime they purchase something at the retail level, we should point out that the fair tax applies to goods and services at the retail level only, not to used goods.
Okay. Yep. Okay.
So when tourists come over, they're buying their touristy souvenirs, knickknacks, etc., food, any services, hotels, all of that stuff that have the fair tax applied to them. All the tourists are going to be paying into our system. Plus, this is a little bit funny, and this is a little bit more nuanced, because it could be a good thing or it could be a bad thing, but it also captures taxes from illicit activity, illegal activities. It's like if you're involved in drug dealing, you're not running a normal business claiming all your income off the drugs that you sold. You don't have profit and loss statements. You're not applying any of the stuff to the IRS, and you're not paying income tax on your income. But even drug dealers have to eat, they buy cars, they buy equipment, they would all end up paying the tax as well. So you're capturing some of that from illicit activities, good or bad. Again, we can argue about the merits of it. In illegal aliens in the United States would also pay tax, just like everybody else does. So it broadens the tax base out, almost doubling it versus just taxing the people who are earning an income.
Or the people, and you said earlier, I think this is an important distinction. It's not whether you're earning an income or not per se. Whether you're declaring your income is so if whether you declare it or not, whether you declare taxes or not, there's no evading this tax in any of the under the table wouldn't even exist anymore, because the only reason to pay somebody under the table is so you don't have to pay taxes. At this point, you wouldn't have to declare anything to the IRS anyway. So the term under the table payments would vanish. Nobody would care about that. And now people who, drug dealers, anybody who I don't know why I just go to, I'm sure there's loads of activity, illegal activity outside of drug dealing. But now even illegal activities are actually going to be paying taxes. The mafia is going to be paying taxes, whether they mean to or not, if they buy anything. So, okay, so that explains how. So when you take a look at these numbers, and I had some of the objections up, and in a minute I may ask you to vamp a little bit, and I'll look at some of the objections because I was on the other machine, and I got to stop doing that. But there were a number of objections to this. That we're talking about the numbers, but we're talking about the same tax base. So one of the important things is this dramatically increases the tax base, and there are significant drawbacks to that, and we're about to start to get into some of those drawbacks. But so what this really means is there's essentially no avoiding it, and there's no, if you buy something, you're going to get hit with the tax. So, and again, this makes enforcement
at the retail level.
Yes, thank you, at the retail level. All right. So now.
Well, I'll let you
yes.
I'll let you look up the complaints against the fair tax, and I'll get into a little bit of something because there's some shenanigans going on with inclusive versus excluded taxes, and this has come up several times about the tax rate and what it said, 23%, and there's some institutes out there that have said, well, wait a minute, this is going to be more likely like 40% taxes, not 23% or high 30s, low 40s usually. And the difference there is between what's considered an inclusive tax and an exclusive tax. And the argument goes, well, if you pay $100 for something and there's an inclusive 23%, well, we're going to round it for better numbers. 20% inclusive tax, that means $20 of that $100 that you just spent goes in taxes, and you actually paid $80 for the jacket. That is calculated as an inclusive tax. The reason that they decided to use an inclusive tax is, one, because that's how income taxes are calculated, as an inclusive tax. So they just kept it the same as an inclusive tax. It does suspiciously also give you a lower percentage, because when you do the math, $20 is not 20% of $80. So they're like, wait a minute, there's a problem here. And of course, again, it's just the difference between inclusive tax and exclusive tax. You can use either tax rate, and you're going to pay the same amount in tax, and you're going to pay the same amount in the product. So it was much easier because they wanted to include the tax in the price of all things that you bought, so you don't pick up a jacket off the shelf, go to pay it, and then suddenly they add a whole bunch of extra money on top of it for the tax. You'd look at the price on the shelf and say, that's how much it's going to cost. The tax is included in that list price. So that is one of the big reasons why there's such a big discrepancy with many institutions saying, oh, it's not really going to be 23%. It's going to be closer to 40%. And it's because they're deciding they're going to use the excluded tax percentage versus an included tax percentage. Ultimately, when you actually run all of the numbers, you're paying the same amount regardless of which tax you use. They have decided to use it as listed as inclusive.
And I did find, I think, half of what I was looking for. I'll look for the other half. I do think we should get into that. There are complaints that says, okay, this would not be a tax at 23%. It would be a tax at 40% when you calculate it a certain way. Yes, you can calculate it that way, but I think that is a disingenuous claim for any number of reasons. I think just explain the math on that, but the long story short on it is, what the businesses will do is a business can sell any product at any price they want, and whatever price they sell it at, they're going to have to add. They're going to have to get the extra on paper, the tax rate would be the last few proposals, and the original proposal was 23%. So it's a 23% tax. How it works effectively depends on what assumptions you make and how you get into it. But okay, all right. Let's see. So one of the complaints. So it's going to dramatically increase the tax base. There's going to be no avoiding it for the most part. You're not going to have to worry about compliance. You're not going to have to deal with the IRS. That's businesses, and businesses just have a single flat 23% rate. Now, one of the complaints was this is on everything. So when we were talking about progressive and regressive using a very bastardized, just sort of definition, it was the one Ethan gave last night, and I think it's a good one for this. Doesn't matter what. We're just using these terms here because they're easy. Long story short, the current system is progressive. The people at the top pay more as a percentage, not just more in terms of the actual money, but ostensibly they pay more as a percentage, as high as I think about 40% at the really, really highest levels. And at the low end, you pay zero. With this tax, everybody's going to pay that flat 23% rate, and that is on cars, yachts, that is on all of the really big ticket items, but it's also on baby food. It's on Cheetos. It's on soda. So what the argument is wait a minute. We're going to be taxing the poor now. The poor have been kind of added into this tax base because they can't evade this tax either. So if you are earning below the poverty level right now, you don't have to pay the income tax. You will have to pay this tax. You will not be able to get around it. So what is the answer to that complaint?
Yeah, they recognized this, and they knew that this was a problem. And it was a pretty significant problem. The solution they decided to come up with was they were going to do what's called a prebate. So there is one piece of information that you do have to file with the IRS, and that will be as head of household. You have to list the number of people in your household, and you have to submit either their resident alien number or a permanent resident number or green card number or your social security number. And they do that just for tracking, so people aren't trying to claim, multiple people, the same multiple people in multiple households.
Okay.
So that you will have to file a head of household form. This form is used to calculate what's called a prebate, because they decided that nobody should have to pay tax on the necessities of life. So a prebate takes the federal poverty rate, whatever that rate is, and they decide that up to that amount, you're not paying any tax at all, and we're going to remit to you that amount of taxes that you would pay for that at the beginning of the month to offset the taxes you will pay to purchase things like food and diapers and things like that. So they recognize that you're going to bear this cost, and that the poor aren't going to be able to, they're going to have a difficult time with this. So they're going to offer a prebate. It's given to you at the beginning of the month, not after the fact, but before the fact. And that money is there specifically to offset the amount of tax you're going to pay up to the federal poverty line. And they've got an entire, if you go to fairtax.com or it's not .com, it's what is the charity one?
Org.
Anyway, org. Fairtax.org, they actually have a tax schedule which shows the federal minimum wage, shows what the prebate level is, and you can see, a family of 5 will get this much amount of money to offset taxes in prebate every single month. So that is something that does add a complication, but it does also, stop, and that's given to everybody, by the way, not just poor. It's simply given to everybody. Nobody should be paying tax on the necessities of life. So that is how they stop the poor.
So Elon Musk will get a prebate that will compensate him for the taxes that he's paying on the necessities of life, as will anyone who's earning, everybody's going to get this prebate. So the government's actually going to be paid. This is, and by the way, I looked this up. If this were ever passed, that prebate would be the single largest social welfare program passed in American history. Yes. Worth noting. So everybody's going to get that. Now, I can foresee a couple of problems. One, who's going to determine how much that line is going to be? We kind of have that problem already because we do have a poverty, so we have to make that determination already for when we say who doesn't pay any taxes. But the problem gets complicated as well because there's a different cost of living in different states. You had said this once, and I think this is true. When the cost of living is calculated for especially I think it was for VA benefits, which is tied to the cost of living. The government is incentivized to keep that number as low as possible, and it has not kept up with inflation, so that the cost of living index, as calculated by the government, is a cheat. It is actually constantly really below what that number is, and it lags significantly in keeping up with those kinds of changes. So is there an answer to that complaint?
The answer is you need to hold your representatives accountable for that. I mean, we have all of those problems currently. They're problems we have to keep on top of, even if we were to pass the fair tax.
The current tax code already has it. Although, to be fair, it would be a problem that would now essentially affect every American. Many Americans, I do actually foresee, if you're making $100 million a year, you may not even bother filing for the prebate, which, hey, the government gets to keep that money. But nonetheless, now every American would probably keep a little closer eye on what the cost of living index is. Again, I don't think you could use a single number. You'd have to probably. But okay, so we found at least a potential snag here. It does look like it's going to, and you can certainly see, so the prebate has even, and now you're actually getting the prebate before the month, before, so, if you're paid, you're being paid basically at the beginning of the month, so that you, and it will compensate you for the taxes that you will be paying to meet whatever the minimum standard of living as determined by Congress.
Correct. And this is, the reason for this is that they decided to do this was because the alternative was, well, why don't we just not tax essentials? And we have a very good program in the United States that we can look at to see why we don't want to do that. And it's the WIC program, Women, Infants, and Children. They tried this. They've done this. They know what happens. And when you start, say, giving a list of requirements in order for something to be considered an essential, say a food item, manufacturers will change their products in subtle ways in order to meet those requirements. So they have this constant battle between, these are the things that we mean. Well, Pepsi wants to be able to get their product tax exempt because then more people will buy Pepsi because it's cheaper.
Of course.
So Pepsi's going to do everything that they can in order to get their Pepsi products to qualify as essential products. And they went, we're not going to even deal with that. We've seen this causes huge problems in the WIC program, and it tends to overly dramatically decrease the number of products that are available. So it reduces the family's choice, and sometimes families have very specific dietary needs for health reasons, and we shouldn't be dictating what is right for your family. So to avoid that, we're simply going to tax everything at the retail level, and then we'll offer the prebate to offset those taxes. They when they calculated, like, this is actually an easier way than trying to go through all of the rigmarole of deciding what constitutes an essential thing and that can be tax exempt. We have that problem crops up all of the time, and they actually determined that it would be easier to just simply do the prebate than it would be to try and pick and choose what products actually get taxed or which are tax exempt.
Well, the prebate creates essentially one point of contact where it's, okay, we have to figure out what Americans will spend on the necessities and make sure that they're not taxed for that, and then we ship them out that money. There was a couple of interesting, they said, well, we could send it in like a credit card, and you get a credit card that's just that money, and people could actually shop with it if they wanted to, yada, yada, yada. But that notwithstanding, that's easier than having businesses vying for any kind of exception, which starts the ballooning of the code again. But the other problem is now, if the government isn't Johnny on the spot with keeping up with the needs of the average American, which my confidence that the government's going to be able to do that is reasonably low. Now, again, this is a problem that applies to this current code, so this isn't a new problem. It seems like
you've got a. Yeah, and you've brought up a very good point. When the government is giving you a check and you're actually receiving that money at the beginning of every month, and they don't keep up, then you're going to have everybody, especially at the lower end of that are really relying on that money, even up through the middle class, it's relying on that prebate money. They're going to be Johnny on the spot about saying, "Hey, wait a minute here.
That's a good point." Yeah,
you guys are not bringing this up, because this is money that they're actually getting, that people are going to say, I need this money, because you can use the money for anything. I mean, you could take that prebate at the beginning of the month and you could go take your family out to vacation if that's what you want to do with it. But you realize that you're still going to be paying, the tax on all of the stuff that you're purchasing at a retail level. I would like to quickly address one thing, a question that's been asked like 3-4 times or something, is whether this applies to corporations. This applies to all retail sales, period. So if a corporation buys toilet paper, it's buying utensils, it's buying anything, cleaners, all of that, it is all taxed. Anything purchased at the retail level is taxed. End of discussion. It doesn't matter who's purchasing it. So a corporation doesn't get any special treatment purchasing products over an individual. And this also includes the government. When the government purchases its supplies, its staplers, its paper, it's paying a tax on those things as well. All consumable items would be taxed equally. So there is no exception, whether you're a corporation or an individual. All retail sales are taxed.
Which is part of what simplifies this, right? So in order to come down from hundreds of thousands of pages of code to tax code to 150 some odd pages, part of it is it's a flat tax. It is as we defined it earlier. That means it's a regressive tax, and we tend to be for progressive taxes, for at least liberals do, for any number of, in my view, rather good reasons. But it is a different approach. And then to compensate for it, which to compensate for the damage that would be done, in particular to people who now so here's a very important critique. When and this is why I said earlier, so you do need to get down to the numbers. It's important to understand, in my view, the larger picture, which is you are essentially moving a 25% income tax that we are on average paying to a 23% sales tax. On average, it's sort of like, okay, you're actually losing slightly less money, and we've dramatically increased the efficiency in the system. You don't have to pay money to get your taxes done. You don't have to. It makes life a lot easier. But if you are below the poverty line, your current tax rate is zero. It's zero. You're not paying any taxes. So now in this new system, your tax rate goes up to that 23%. You are paying that 23%. You can't get out of it, because if you're going to buy something, which you kind of have to do, you are now going from zero taxes to 23. That is a legitimate complaint. That's why it's important to realize that those average numbers are very important, but there are real people behind, especially the low end. And so that's the idea of the prebate, which is they'll actually still be paying zero because they will be paid in advance for the estimated taxes that they're going to have to pay. And so now it's actually the government paying us estimated taxes instead of the other way around. Is that roughly it?
Yes, and I'd also like to point out a few other things. When you're paying income, you fill out your W-4, and you can actually set it up to where you're essentially not, like if you're at that poverty line level, you can set it up to where you're not, the government actually isn't really withholding much of anything in income tax. So, and you can do that because last year you didn't owe any federal income tax, so you're not expected to get a significant raise this time. So you can actually set it up where your withholding level is near zero. What you cannot avoid is the FICA withholding. And this, once you get above the poverty line, where you have enough tax credits available to you, like earned income tax credits, child credits, anything like that, some of these are applied automatically, where at the end of the year, you don't necessarily actually owe any income tax. You get a rebate for any income tax that was collected. One, they took that through you through the whole year. You could have been using that through this whole past year. But two, you don't really pay income tax. And that's true for about 48% of Americans. They don't actually pay income tax. What they do pay, and almost all of them pay this, is FICA taxes. And they can't get out of that. As an employee, you are required to pay 7.65% in FICA taxes. And your employer must also pay 7.65% on your behalf. So right there, your employer incurs a cost of 7.65% of your income, and you, even though you may not actually have to pay any federal income tax, you are still paying the FICA tax. And with the income or with the fair tax, that goes away. So you are automatically going to get at the minimum, you'll get a 7.65% raise.
That's okay.
And these are for people at the low end of the spectrum. Yes. So, actually at the lower end of the spectrum, your FICA taxes is the biggest tax burden you have. And FICA taxes include Medicare, Medicaid, Social Security, those things. Now, Social Security is capped at $90,000. Medicaid or Medicare is not capped at all. You're charged on all of your income. And these are all broken down into certain percentages, and they're collectively known as FICA taxes. And you don't get out of paying those. So so if you're working, all of the Medicare, Medicaid, all of these programs in the federal government that rely on the FICA taxes, they only tax those people that have earned income. Now, wealthy people and larger corporations have the ability to structure their income in such ways that they can avoid that. Capital gains tax is a perfect example of that avoids FICA taxes. FICA taxes are only applied to earned income, that income you got in exchange for your actual labor. And that's a regressive tax because the people who are most likely to have earned income are the less wealthy people. The wealthier you get, the less earned income you have because you can structure it in such a way that you can change it from earned income into capital gains or a dividend payment. Dividends aren't taxed that way either. This, under the fair tax, all of those programs would be funded out of the general fair tax, which expands that to all people purchasing at a retail level. So you're no longer limiting the number of people who are paying into those systems. Now everybody is paying into those systems, including people who are here illegally, who are people here legally under work visas, people who are here vacationing, tourism, etc., any illicit activity. It all expands it all out. And all of those programs are now vastly increase the number of people paying into those systems because everything would fall under the fair tax too. And then, of course, it's up to government to allocate those funds appropriately.
All right. So, so that's an extraordinarily important point. I want to point out, and we all remember that, well, we don't all remember this. I remember this when it came out that Mitt Romney, who was the CEO of Bain Capital, made a shit ton of money. And when he was running for president, his taxes came out, and we learned that he was paying 14.9%. He was paying 14.9% because of very creative tax structures that he was able to use using loopholes in this tax code that nobody understands, and largely also through capital gains and all of these tax structures that actually favor the rich. So again, and I said this earlier, that while ostensibly the tax rate on higher incomes can go up to 35%, the reality is the amount of tax that they actually pay tends to be a lot lower. Mitt Romney's secretary paid, if I recall, that year, 21% in tax. Mitt Romney's secretary paid 21% of her income in tax. Mitt Romney, who was making at least an order of magnitude more than she was, paid only 15% in tax, 14.9%, 14.7, 14.9, somewhere around there. So Mitt Romney, we talk about a progressive tax, and we want a progressive tax where the wealthy are getting paid more. But right now, money does very little better than buy your way out of having to follow the rules. And because of arguments from trickle-down economics and this idea that you want the wealthy to have as much money as possible, yada, yada, yada. There's so many tax loopholes that people like Mitt Romney end up paying as a percentage less than the average American. In fact, really in some of the lowest tax brackets there are. So this would actually even that out.
Yes, and this brings me into a couple of asides that I'd like to point out with problems in our current system. One, it's so complicated, nobody really knows what it says. When you simplify the tax code, and we've seen this in every country that has ever simplified their tax code, tax compliance goes up. Turns out people are actually pretty willing to pay their taxes if they can understand them, generally speaking. Secondly, there's no shenanigans. It does not behoove the wealthy to hire a bunch of tax professionals to comb through to find the loopholes that they qualify for. It's a simple, straight-up tax. They can't avoid it. It will be paid, period. Wealthy tend to spend more money than the poor do. They will pay more tax. I guess you could theoretically get out of that, but that holds true generally. And the other issue is all of the money that is spent complying with taxes from just average people, average businesses, average corporations, etc. All of that money is now freed up to be used somewhere else. It is an inefficiency problem it's the broken windows fallacy of forcing people to spend all of this money on specifically tax compliance. When you can free that money up, the entire system, all of the market gets more efficient. People become better off overall.
So, and I think just real quick on that one. So, if I recall, and I had the numbers in front of me, so I don't have them. So now I got to go from memory. But depending on the kind of taxes, the kind of businesses you're talking about, so on and so forth, the compliance cost to the government and to the people who are paying the taxes is anywhere between 70% to 105% of the taxes being paid, meaning that some of the taxes that we pay, it costs more money to calculate the tax than the actual tax you're paying. That's staggering. So I don't want to throw you off of, but that's and all that goes
huge
away.
Inefficiencies in the system.
Yeah. Okay.
Yes, there's huge inefficiencies in the system. The system is being used to gain, and of course, this brings into, I guess, my conservative side is going to poke out a little bit here. The tax code is used as a means of control, as a means of influence, as a means of rewards and punishments, which is why politicians don't want it to go anywhere, because they can use, and interest groups, politicians, none of them want the fair tax implemented because it takes away a really big stick and carrot that they can offer people in pursuit of their own interests. They can reward their friends that have helped them. They can punish their enemies that oppose them if they get control of the tax code.
And some examples of that are, for example, whatever. Pick your poison. You can sit there and if you have in your district that you represent, if they manufacture a lot of a certain kind of product, you can find ways to get into the tax code, and this happens all the time. This is one of the reasons it's a huge problem. It's not probably the biggest reason, but it's a reason, which is they say, well, the people in my district are doing something that's kind of essential, and we think that there should be a tax break for the kind of work that they do, and that the businesses there should get a tax break, and whatever the tax break is. So the amount of shenanigans going over tax breaks, and the amount of tax breaks that go not to people or companies, I should say, that necessarily need, and this is a huge complaint, right? I mean, especially for liberals too. It's like, why are oil companies getting all of these huge tax breaks? All of that, in terms of their taxes, would go away too, and that's going to be the next topic that we're going to talk about, because it's, again, they're paying the taxes. At least their income taxes would go away, and FICA, all the other taxes that we've talked about, all of that's going to go away. But so is the them getting the tax breaks. A lot of companies, and I had the numbers on this too. I apologize, the numbers are on the wrong machine. But I think we've heard before, like 𝗢𝐚𝐥𝐿, and somebody hopefully is going to find the actual number, paid like $1 in corporate taxes. There's a lot of tax loopholes. One of the reasons we do this is to make businesses more competitive in the U.S. We'll get into all of that. But all of the shenanigans around that, gone. And now it is just the 23% consumption tax. That's it. And there is no ability for congressmen to horse trade this or to try to improve their chances of getting voted into office, because they're going to screw the average consumer by finding a way to get their constituents to get some kind of either tax break, tax exemption, which is a huge part of what congressmen, especially in industrialized districts, do. Thank you.
And this is a pretty good segue into, the fair tax completely gets rid of corporate welfare.
I do want to get into that. I have an order, so that's the last one. I got one other thing I want to hit before we hit that. So
okay, let's hit that.
So let's so just to reiterate, especially for people joining us now, sort of what we've covered, because it can get a little complicated. We started with the basics. I'm going to hit the top level again and again. There's concerns, so hopefully we've covered that well. But the idea so far about the fair tax is essentially that we would get rid of all income taxes, FICA taxes, all of that stuff. Businesses would no longer do withholdings. You would not have to file with the IRS a income tax return. You would not be, there'd be no tax evasion in any common sense. All of that would go away. The IRS could probably get along being 1/10 the current size. And instead of paying any of those income taxes, which for the average American is about 25%, you would be paying a 23% national sales tax. So basically, on paper, and we're about to get into what this actually means, but on paper, the price for everything goes up 23%, which is a little hard to swallow. But if you're making 25% more because you're not paying any income tax whatsoever, that's easily absorbable. There, again, we're talking about averages. There are exceptional cases. Again, if you're below the poverty line and not paying any taxes, that's a tax increase. We've talked about that. We've talked about the prebate, which would ostensibly offset that by getting you that money in advance so that your taxes are paid before you end up buying anything. We've talked about also how this would dramatically increase the number of people paying taxes, because now under the table doesn't work anymore. The only reason to pay someone under the table so you don't have to pay income tax, there's no such thing as an income tax anymore. So tourists in particular, the tourist industry generates more revenue in the U.S., I think, than most people realize, and all of a sudden it would generate even more because they would be paying those taxes. They don't make income, they don't pay income taxes, but tourists would be paying taxes when they come, and that would be built into the sales. Anybody who is making money off the books, any illegal income streams, would still be paying taxes. So you have now dramatically increased the tax base, and the taxes would be the same amount, this 23%, which is the last number that they used. It would be the same amount at every income level. Again, on paper, that looks a lot less for the wealthy. In reality, it is a lot less for the wealthy who aren't evading their taxes and for the wealthy who successfully evade. And there's a lot of wealthy people who do pay at that higher percent, and there's a lot of Mitt Romneys who pay at only 15%. Even he would not be able to avoid much of this income tax. So I want to get into the two biggest remaining elements of this. The first is the general thought that a lot of people have is, well, wait a minute. Even if I'm making more money, if the cost of everything goes up 23%, that disincentivizes purchasing things. And certainly for some people, it is going to be a greater tax, and you're going to be incentivized much more to not spend money because everything's so much more expensive. Isn't that going to slow down the economy? And isn't that going to cause the GDP to get hit and have downstream consequences for everybody's income? Basically, when consumer goods, the price of consumer goods goes up, the economy slows down. Is that a concern? Well, let me reiterate that. How do proponents of the fair tax address that concern?
There are two issues, two kind of ways to look at this, I guess. One of them, I guess now I get to poke a little bit of a more liberal side of myself, Like, we're already consuming at an unsustainable rate, and why are we encouraging even more consumption? Like, there's a institute out there that calculates the number of Earth that would be needed to that we would need to have in order to sustain the consumption levels that we have. And in the United States, it's something like 3.5 Earths would be required to actually sustain all through eternity the amount of consumption that we have. We don't have unlimited resources. The more we consume, the more pollution we create, the worse off the planet can be from an environmental perspective. So it helps incentivize less consumption, which we actually kind of need across the world, at least in developed nations. So that's the kind of argument from a more sustainability perspective of the long-term sustainability of the Earth. The other one is that doesn't actually end up really affecting things too much because of other issues that we haven't gotten into yet.
So let's start to get into that. Now, one of the things that's going to happen is businesses are actually going to save a tremendous amount of money. Businesses will no longer have to pay payroll taxes. They will still pay taxes, but they'll pay the same taxes everybody else is paying. They'll be paying the retail consumption tax. So that is, if they're saving all of this money, the people who are proponents of the fair tax have said that the tax would actually drive prices down. And in fact, depending on how you calculate the numbers, one of the things that they say is, and not immediately, but over time, especially after a couple of years, the price of goods will actually drop to roughly what they were before the 23% tax was implemented. Now, this doesn't make a lot of sense. If you've added a 23% tax, the price of everything should go up 23%. The general consensus is that it may initially, but then it will fall back down to roughly the same prices. How does that work?
Because corporations, companies, businesses, they all pay tax. And they have to make a certain profit margin out of the products and services they sell in order for it to be a viable company. So if you remove the taxes that they are paying on a business level, then that's a cost to the business that they have to recoup in the price of their products. So all products that you buy in the United States, especially if they're manufactured in the United States, all have an embedded tax cost in them already. And they asked one of the tax foundations to calculate what that average cost was, and it came out that about 21% of the cost of the goods, this is an average across all goods, about 21% of your price is taken up by embedded taxes that businesses have to pay. Taxes are all paid by individuals. Businesses collect taxes, but they have to collect them at some point from some individual somewhere. And they have to maintain profit margins or the business just isn't viable and it goes away. So everything that you buy now has an embedded tax price already in it. And if you remove all of those taxes, eventually, I mean, like I said, it's not an immediate thing, though it happens shockingly fast, those prices will drop by that percentage. Now, when you break it down to different particular sectors, those numbers do fluctuate between 19%, all the way up to like 26, 27%. So there are going to be some goods that you'll see drop back and actually be cheaper than they were before the fair tax was implemented, and a few of them will be a little bit more expensive than they were before the fair tax. But once you remove that embedded tax cost out of the price of products, you're going to see a significant drop, and the market will force those prices down. We've seen it. Plenty of examples of this in the real world. A really great one is when the federal tax on aviation ticket prices sunsetted. They didn't get the bill passed in time. That tax sunsetted. It took 1 month for the prices, and I think it was a 14% tax. It took 1 month for prices to drop 14% because one small company decided they wanted to expand their market share, and so they said, "Hey, we don't have to pay this 14% anymore. We can drop our prices by 14%. We can undercut the prices of the bigger carriers around us, and we can increase our market share." Well, of course, the big companies aren't going to stand for that either. It took 1 month for the ticket prices to drop that 14%. So we've seen this happen in real time, in the real world, and it happens shockingly fast. So, yes, they fully expect that those embedded tax costs will drop. And that's going to lower the costs.
So the argument essentially is, if I understand correctly, so the first thing I'm going to say is sort of a very basic thing that you learn in Econ 101. Businesses, for the most part, don't set prices. That sounds counterintuitive. It's like the business can set the price at anything they want to. Well, that's true. But the higher the price that they set something to, the fewer the people will buy it. They'll have less sales, and that will have an impact on the bottom line. The lower they set it, the sales will go up and yada, yada, yada. So they try to find a state of equilibrium between having enough customers that they're making as much money as possible with enough high enough price that they're making as much as possible. So the market is set. The market sets the price, and that's set by supply and demand. If the demand goes up, and the supply stays the same, you can sell the products for more, and you will, because you're interested in making as much money as possible. That's the assumption that is made going into these calculations. So what ends up happening, the sort of initial thinking, usually to the average person is, and this was, so the airline, I think it was like, I actually thought it was like a $150 flat tax on a ticket tax. So it was like for every ticket that they sold, the airlines had to pay $150 as a tax or something like that. I don't quite remember what it was, but that sunsetted. They Congress failed to pass that. So all of a sudden the airlines didn't have to pay this tax anymore. Now, initially they all just said, great, gravy, that's extra money we take home. We keep the prices the same, extra money we take home. Except that smaller airlines said, wait a minute, if we lower the price, which we can now afford to do, people will say, why am I going to go with one of the big airlines when the smaller airlines are cheaper and we can increase our market share and we will actually make more revenue? We'll be lowering the price, but enough extra customers will come that we will make more money by lowering the price because we will be so much more competitive. Once those airlines start to do it, the other airlines, usually the bigger airlines, will sit there and say, yeah, good luck with that. But once they see their market share start to drop because people are starting to go with the cheaper airline that's otherwise reasonably identical and in this market could have the higher price, but they've now lowered the price to a point where their market share is going to start to expand and they're going to start making more money. So now Delta, American Airlines, they all need to either lower their prices if they want to maintain their share, or they're actually going to start to get a hit on the bottom line because, yes, their prices are high, but they're losing customers. So the equilibrium point ends up dropping, and businesses that take advantage of the new equilibrium point will make more money, and the businesses that don't, by keeping their prices too high, will be essentially be pricing themselves out of the market. So now that's sort of a very basic Econ 101. So that's the theory, and in practice, to the best of my understanding, that's usually in fact how it works, which is when businesses end up having cheaper prices. Now it's not a 1-to-1, and I think this is worth noting. If a company is suddenly making a lot more money, they will, if there are shareholders, the shareholders will expect some of that. So some of that is going to get passed on to the shareholders. And if they don't pay their employees slightly more, if the employees know that a lot more money is coming in, they're going to start to have disgruntled employees. It's not a 1-to-1. It doesn't, as soon as the company's making 15% more, it doesn't mean that the prices are going to drop 15%, but usually it does mean that the prices actually drop, because by doing that, the business is going to be more competitive. So at least if the other companies have the same opportunity, this gets into also why price fixing is such a problem, why we don't permit monopolies. We don't allow monopolies because they can get around that level of competition, and then they can start to set the price artificially instead of by the market. So, all right, so that's, there's one. So businesses would ostensibly now be paying a lot less taxes, and that would get passed on at least to some degree. I object when people say that they pass that savings on to the customer. Some of that gets passed on to the customer irrefutably. Not all of it. How much depends on a great deal of factors. But it's worth considering. And then, so one other thing. So we've now sort of talked, I think, about sort of at least what this proposal purports to do. Okay, and Brooks, we would love to have you on to discuss it, Brooks. So we're right now we're just sort of doing a primer on the proposal and what it purports to do. I would love to have a discussion, and judging by our interactions with you, my sneaking suspicion is you're going to know more about this than any of us. But we're starting to wrap this up, and we're already a little past time. So I want to hit the sort of last point. I will go on it. It's a primer. Neither of us are economists. Neither of us are experts on tax. And this is, our general understanding of the plan, which I think we're covering accurately, at least the claims that they make and some of the objections. I'm not an expert on the objections either. And it's something that hasn't gone. But I appreciate the offer. Would love to have you on. Let's talk, because I think that we could have a very good discussion on that and a few other topics. So thank you very much for the offer. We're going to wrap this up soon. So, but I do appreciate it. So the final one I want to talk about. Conservatives in particular are always talking about how the U.S. tax system negatively impacts businesses. And we know they set up businesses in the Cayman Islands. A lot of corporations prefer to set up businesses in other countries where the tax structure is favorable. I've heard this complaint from a lot of people or a lot of businesses that say that it's really not feasible to have, and at least any company that's going to do exports in particular, to have it headquartered in the U.S. because the extra tariffs that we have, I shouldn't say tariffs is a very specific word, and it's not, but the taxes that other countries will say will have an allowance. France will have an allowance. If you sell a car in the U.S., the U.S. will put whatever taxes on it, and then the French will tax up to a certain point, but they let you deduct the taxes that you're paying to the U.S. government, which is usually higher, so you don't pay taxes in France if you're a French company selling a car to the U.S. So these taxes end up being, at least to the best of my understanding, if it's easier to, as a French company, to have headquartered in France, where you may be Coca-Cola, but the question is, where's your headquarters? And I don't know, they may actually be, but I'm talking like Cayman Islands, offshore, putting your company in a place where the taxes are far more favorable. I do, as I recall, Daimler-Chrysler had a choice primarily of having their headquarters in Germany versus having their headquarters in the U.S. They chose Germany. The taxes in the U.S., and there was a testimony to Congress about this. Head of Daimler Chrysler said, look, it was a financial decision. That's it. And they're required, by the way, by law to do what's best for their stockholders. And they're like, we had a choice. If we were in the U.S., the effective tax rate would have ended up being close to 66%. It would have been closer to 44%. In Germany, 44% is a lot better than 66%. We chose Germany for financial reasons. How does this affect that calculation?
Well, it does. It affects it two ways. The U.S.-based companies are at a disadvantage because the U.S. claims all of their tax rates, regardless of where they sell if they're headquartered in the United States, they collect their tax rate regardless of where you sell your product. So it doesn't matter, if Chrysler, before they merged with Daimler, wanted to sell into the German market. They still paid the U.S. government all of their taxes and then had to sell into that market, regardless of, they're selling into the German market. But because they're headquartered in the United States, they've made revenue, and the United States still charges all of that revenue.
Okay.
So if you remove all of those taxes, well, we've just become the most competitive country in the world because we now have a zero tax rate at all. You're not paying any of those taxes. So, businesses would, even in those areas like the Cayman Islands, Ireland is another good place. A few of the European countries, because Europeans usually refund the VAT if you export your goods. Mm-hmm. So, you don't end up paying that. The U.S. doesn't do that. So now you've got a very big draw because, well, your tax rate and your tax compliance costs all just dropped dramatically. So it would bring the United States as a very, very big draw for companies to headquarter their businesses in the United States. Even international businesses would want to headquarter in the United States. because they would now get a competitive advantage in the price market. Also, U.S. products in export still have that embedded tax cost when they export to other countries. So when you remove that embedded, at least most of that embedded tax cost, they become a lot more competitive in the world market. So we could see it would be ostensibly would be a very good plan for increasing our exports, bringing manufacturing back to the United States, which from we suffer a little bit from not in my own backyard syndrome in the United States. Everybody wants, the wind, clean energy and stuff, as long as it's not right in their backyard. But if we're going to choose from a global environmental policy where we manufacture goods, the United States is probably one of the better places to be manufacturing goods because they have much stricter, or at least most first world nations, because they have much stricter emissions controls, much stricter health and cleanliness rules and regulations that have to be followed. Having everything manufactured in China that doesn't really care and doesn't cap a lot of this stuff, they are cracking down a little bit on some of that. But you don't want, India is a good example. India doesn't cap any of their emissions or anything like that. So you would actually want manufacturing brought into areas that have a lot more stringent rules and regulations over what can be emitted, what pollutions can be created by your manufacturing. So on the one hand, we're creating more jobs in the United States, bringing more businesses back to the United States because the United States has suddenly become an incredibly competitive place to base your business out of, even with the additional increases of costs of like labor and compliance costs for regulations. Even with those, it's a big enough incentive to draw a lot more companies back here. Had we had the fair tax, Daimler Chrysler would be Chrysler Daimler, and it would be based in the United States, not in Germany. So we would have a lot better competitive advantage as far as exports and the global market, as well as creating a very large draw for businesses to come to the United States, creating an environment where ostensibly you would have a hell of a demand for labor, and our labor pool has remained remarkably stable. So it would help to push wages up in the United States as well. It's not quite as clear cut as all of that. I mean, there's a lot of other calculations that go into that, and wages don't go up as precipitously as you think they do, and prices don't drop quite as precipitously as you think they should or could. There is one other possibility when it comes to business that's beneficial to at least the American people. As soon as your business is no longer paying payroll taxes, that's another increase in revenue for the companies because they're not paying payroll taxes for you as an employee. And they've got a couple of choices with that. They can try and pocket that money, though market forces will eventually force at least a large chunk of that back out of the company and back into the hands of consumers. And it will come out either in a price drop in their products, or it will come in as a wage increase to their workers. Because as soon as you eliminate 7.65% tax that they have to pay for every single employee, they could raise your pay by 7.65% immediately, and it would not change their bottom line in any way, shape, or form. The employee now makes 7.65% more than they were. The prices will eventually drop. It could take some time, and you may not see all of that money come back in price drops, but prices will drop. And you can see employee pay increase. You're not dealing with the IRS at all. The IRS is one of the most frightening and powerful institutions in the world, unless, I guess, you could go to Russia and Putin could have control over you. But as far as most of your industrialized nations, the IRS has a frightening amount of power.
Yes, it does. And by the way, the only organization that I'm aware of that are actually allowed to assume you're guilty until proven innocent. So if they charge you with tax evasion, you have to prove you didn't do it.
Yes.
And that is something that has always troubled me profoundly and has led to the destruction of a great many of lives. There's a reason we have innocent until proven guilty, and it's and the fact that the IRS is absolutely allowed to violate that. It does. I mean, it's not just that they're allowed. That's standard practice there. If the IRS says you have evaded taxes, it is now incumbent on you to prove you did not. And that can be a challenge, especially to an organization that's already assumed you're guilty. I think I cut you off, so I want to finish that, and then I have, I think, 2 more questions, and then I think we're out of here.
No, I think I laid that out. It's like I realize that the fair tax people are putting the absolute best face. They're assuming that the prices will actually come down 22% on average, and it probably won't entirely come down by 22%, but it will come down significantly. You will immediately gain approximately, this is just an average across all of workers. That can be problematic with dealing with averages, but average increase from not having any money withheld from your check of about 24%. So you're automatically getting a pay raise. That will happen immediately because businesses don't have anything to do with that. That is the IRS forcing withholding. So you will automatically get that. Prices will start to come down. Businesses will also have to choose what they're going to do about their payroll taxes, whether they're going to raise the pay of their employees by that little over 7.5%, or if they're going to drop their prices a further 7.5%. There'll probably be some mix and match in that, and market forces are going to play a big part in that. I have no doubt that prices will come down. Your pay, I know, will go up. At least, well, your pay won't go up. You will keep all of your pay.
Yeah, your take home will go up significantly. Yeah. For anyone who's not in the lowest. Yes. And the tax laws will become dramatically simpler. People can't avoid the tax. It increases the tax base. So you're not putting a greater burden on certain areas of it. It reduces a hell of a lot of the special interest money into the government, because a lot of people are trying to push for, this tax break or this tax incentive or this, they use the tax code in order to incentivize behavior, reward friends, punish enemies. And it removes one of the most frightening institutions in the United States from ever having to deal with individuals. And there have been actual reported cases that they're actually true, that the IRS has led people to commit suicide. Because they do expect you. Yeah, they do expect you to prove your innocence if they accuse you of something. So it's the only institution that actually does that. I mean, a due process when it deals with the United States. To be fair, I'm keenly aware too that it is taking away legit, in my view, legit abused sometimes, and that's what we're discussing here. But also legit. I mean, for Al Capone, they couldn't get Al Capone, but for the IRS. That does have an impact on my calculus. Where I'm sitting there going like, well, the nice thing about the IRS is you can get people like Trump. But having said that, I'm not sure that that's a worthy trade-off. So I have one other question. And somebody had actually said to tax the churches. The churches would no longer be able to be exempt from the tax because they would pay the same tax as absolutely everyone else, which is, I think, ostensibly where the term fair tax came from. Absolutely everybody is paying the exact same tax, no exceptions. So I've heard conservatives say all the time, I want to go back to the 50s. And that's rife with a whole bunch of landmines there. We'll stay out of the social landmines for a minute. And I think what they mean is back in the 50s, which was actually an extraordinarily prosperous time for America, you could have a single income family where one parent is working, one parent is staying home with the kids, and yet still the sort of American dream of a car, a home, and sending your kids to school was reasonably attainable. At that point, the difference between what Henry Ford was making and what the average worker for Ford Motor Company was making was 30-fold. So he was making, if I recall, 30 times what the average worker was making in his company. Nowadays, I forget what the number is, but I think it's like 32,000 times or something like that is what the CEO is making as compared to that's sort of off the top of my, could be, it's staggering. The numbers are different, but that aside, the marginal tax rate, and I always get, I balk when I think it was when Obama wanted to raise the the capital gains tax by 1%. They're like, he's a socialist, he's a socialist. I was like, do you realize that in the 50s, the time that they want to go back to, that was funded largely by a 93% in I think it was 1969. The marginal tax rate was the highest it ever was in this country at 93%. If you were earning past, I forget whether it was $1 million, it was, by today's standards, reasonably small, I guess, if you're wealthy. But if you were earning past a certain amount, they taxed 93% of everything over that amount. And we had the single most productive and powerful economy we've ever had, that even conservatives are like, that's the time we want to go back to. It's like, a single income family able to achieve all those things. Why don't we just go back to the, aside from the fact that apparently going from, 15% to 18% on capital gains is somehow socialism, assuming we could get the political will to go back to what conservatives tell me they want, which is a 93% marginal tax rate. That's what they're saying, because that's how we did it. Why do the fair tax people say that this is somehow a better plan than that?
Well, one of the things that you have to realize is that over the course, especially through the 70s, there's been the rise of tax shelters. There's become a lot more ways of evading taxes. The tax code has become so much more complex. There's so many different shelters to put money into. All of these things didn't exist in the 50s. It was much more difficult to evade your taxes. The tax code was super simple. Compared to the way that we have it now, it was particularly simple. And the fact that we had an enormous manufacturing base. We were a creditor nation. We lent everybody else money. We produced everything. We exported far more than we imported. There's a significant economic change between then and now, and we can't simply go back to that. If you tried to raise, those tax rates up to 93%, there are plenty of tax shelters for the wealthy to put their money that never comes into the United States. The fair tax would, if you implemented that instead, there would be no incentive for the wealthy to move any of their money offshore. As a matter of fact, they would be disincentivized because there is costs associated with that. So if there's no cost to keep your money in the United States versus even a small amount of cost to keep your money in, say, a Swiss bank, they'll bring their money back to the United States, which makes it then available for investments. So it would still be a better option to implement the fair tax versus trying to just go back and let's just raise the tax on all of the wealthy. The wealthy have the resources and the incentive to be able to, and the ability now to avoid all of those taxes if they so choose to. It's not helpful, and it wouldn't bring in nearly the revenue that they think that it would.
Well, and even then, by the way, when the marginal tax rate was 93%, even back in the 50s and 60s, there were enough ways to evade it that the effective tax rate, if I recall, was about 47% on that group. So that group that was supposed to be paying 93% was paying, and somebody can look it up. I think it was 93% in 68, 69. I think it was 93% was the tax. I also wanted to show this. This is the complexity of the tax code. This only goes to 2010, but you can see what we're talking about the logarithmic growth. In the 1950s to 1960s, you can see it's at about 15,000 pages of code. In 2010, and I apologize, I don't have anything more current than that, it had gone up to about 75,000 pages. And this is the result of what we had been talking about the horse trading. And this makes it also, sort of my concern, and it's a little bit similar to and along the lines of the concern that you were mentioning, is the IRS is, in fact, permitted to assume you're guilty until proven innocent. They can put you in jail. They can absolutely destroy lives. They've destroyed a number of lives. Sometimes it's, Al Capone, and sometimes it's not. And it can be very hard to determine when they've acted inappropriately, because if they've taken all your money, it's very hard to find money to defend yourself. And the IRS is a ruthless organization. But that notwithstanding, there are so many tax codes and so many ways. And we talked about this at the very beginning, and I think we're going to wrap this up. An experiment was done, and I forget the organization that did this. It was the National Tax Institute, I think. I don't remember. But they sent the same exact tax return. 5 different professionals paid all of them to find out what was owed, and each of them came back with different amounts. And it's sort of like, okay, tax professionals can't tell exactly what you owe, and if the IRS really wants to come get you, they can come get you because nobody understands this, and they can nail you on even the smallest thing. How often does that happen? I don't know. I know it happens. I don't know what the numbers are on that. I don't even know how we'd figure that out. I think there's been some interest recently in figuring that out, but yeah. So the IRS is a huge problem, and I think that this, at a minimum, would take care of it. So I do hope we can have Brooks on at some point to discuss it more. Like I said at the beginning, what we're really trying to do is provide a primer on this. I find it an absolutely fascinating thing. It would revolutionize, pro or against. It's a dramatic change in the U.S. tax code. Again, once at the 2,000-foot view, basically eliminate all income taxes and instead replace it with a national sales tax. That's what we said at the beginning. That's the 2,000-foot view of this. The average American pays right now about 24% of their income in taxes. This would replace it with a 23%. Actually, I think it's 25% is what they pay. This would replace it with a 23% sales tax. Again, there's going to be problems at the bottom. This, in some cases, is very good for the top, depending on how effective they are at evading taxes. Mitt Romney would pay more in taxes, believe it or not, this way. Other people would pay significantly less. So it's a dramatic change. It would change everything about how we consider. It is simple, as I said at the beginning. It's a sales tax. That's all it is. But yeah, there's a lot of details. So, Xandring, before we end this, any final thoughts? Anything we missed? Anything that you wanted to make sure got said before we sort of end our primer on? Yeah, I know, Titan. Yeah, that thought crossed my mind. I'm well aware. Any final? I love the IRS. The IRS it's one of the greatest organizations I've ever. I mean, if I could give everyone at the IRS a hand. No, I did not. No, I'm sorry. I didn't want to finish that sentence anyway. I'm sorry. What were you going to say?
And you're not suicidal. You're feeling well, right now. So if you suddenly, anyway.
Yeah. So if I suddenly vanish, if In Time, welcome to In Time's last show. Thank you all for joining us. Oh, which reminds me, I got to make sure I get a hit on. That does remind me of something I keep forgetting to talk about. But please, your final thoughts here.
My final thoughts are the tax system that we have right now can be incredibly punitive in areas, and it can be abused to benefit people that don't need benefit. It can be used to hurt people. It can absolutely, the IRS can actually ruin lives. It's so complex. You have no idea what it actually says. You have no idea what tax you actually owe. It's just grotesquely complex, and it doesn't need to be. And I would rather have a tax system that is most beneficial for the citizens of the country. And from all I can discern from this, it would absolutely improve the general welfare of the population as a whole. Now, benefiting people as a whole means that maybe some people you don't think should benefit are going to benefit from it, but it's definitely going to benefit in many ways, not only in just the fact that you get to keep all of the money that you earn. Prices will come down a little bit. We will expand the tax code, which means you're going to have a little bit more, more people are going to have skin in the game and be paying attention to some of these things like the rebate levels. What is the poverty rate set out? How are we calculating that? Because it'll be important to people again. And it will give us a much clearer idea of what we're paying in taxes and whether what we're spending on a bunch of different programs is worth what we're actually paying. It helps to avoid a very large moral hazard that we currently have in our tax code. And I don't think that what we have is working for us. And it may not be perfect. There are some criticisms, and some of them aren't exactly easy to just dismiss. Some of them are very disingenuous because they're just people that are saying, no, I like the current tax code because I gain benefit from it. And then some people are like, no, there's some general problems, and there are definitely some problems that we should, that need to be looked at closely and see if they're going to actually hold up. But again, just kind of like with the Inflation Reduction Act, which I really hate that name too. It's like do not let the perfect get in the way of progress. Like what we have is just horrendous. And I don't think people quite understand just how horrendous of a tax system the United States has. This is a market improvement. And maybe there'll be some areas where we're like, okay, this didn't work out so well. We can make a few changes. Let's get this fundamentally in place. I think that the standard of living of all Americans is going to go up dramatically. I think that it will help the economy drastically by bringing in an enormous amount of new business to the United States, creating a hell of a lot of jobs. You want to talk about let's create some more jobs. Well, that's a really great way to do it would be to implement the fair tax. So overall, I think that the fair tax is a very good plan with some potential problems that may need to be addressed, and some things may not work out the way we want them to, but overall, I think that we really should consider the fair tax as a very viable solution to raising revenue for our government.
All right. Well, and so like I said, I'm a little disappointed. I hadn't really heard of this until, I mean, like I said, I think I've mentioned it once or twice. I hadn't looked into it. I think many Americans don't know what it is. It has been proposed every single year. As I said, I think it was House Resolution 23 or 53, I think.
25.
25, thank you, last year. And it's going to be introduced again next year. The people who are for it are very passionate about it. It is a dramatic change in how the U.S. calculates would calculate its taxes, and it is actually closer to the norm in Europe. So it's at least now, hopefully, what we're talking about and what other people are talking about with the so-called fair tax. As I said at the beginning, we're not economists. We're laymen who I think have taken a pretty good look at it. Look at it for yourself. Figure out what you think. There are a number of critics, obviously a number of people who are for it, but that is, I think, our most charitable and best way to explain what the fair tax is and what is being proposed. So thank you, 𝐓𝐢𝐬𝐴ndering, very much for that. In Time has actually is not technically at 2,000 subs, 1.99. My hope is we're at 2,000 by this Saturday, because Saturday we will be having our 2,000 subs celebration. Hopefully it ain't premature, but we will start airing at I think about 11 p.m. Originally it was going to be 10 p.m. It's going to have to be 11 p.m. And I think we're just going to, a few hours. We've reached out to a lot of content creators, former guests, friends of the show. So we're hoping they're going to come by. Come on by, share your memories of the show. I'll try to be muted for the beginning, just for old time's sake. It's not old time's sake. I'm still muted half the fucking time, but nonetheless, it'll be a good time. Saturday, we will be doing our 2,000 subscriber stream. So please join us for that. Tomorrow, Commander Lance McMillan will be on for his off time, and I have no idea yet what we're going to be talking about. That's off time for you, but I hope you join us for that. That's always been a lot of fun. And then we're going to try to do a rundown on Friday. That's going to be a show every single night this week. I think that's what we're looking at, but certainly that's the schedule. So thank you all for joining us. 𝐓𝐢𝐬𝐴ndering, thank you very much for bringing this to us to discuss. I think it's absolutely worth people at least knowing what the proposals are and what they claim to do. So much appreciated. Nope. Hold on. Oh, you still there? You're muted. Now you're unmuted. Perfect. And then do that. Perfect. So thank you, 𝐓𝐢𝐬𝐴ndering. Much appreciated for bringing that.
Yeah, I'd like to raise awareness. I think we can make our country better, and I think this is a good start.
All right. Thank you all for joining us. See you tomorrow for Off Time with Commander Lance McMillan. Have a good night, all.